Good morning and welcome to the Killik & Co market update. The big news this week has been the shutdown of the US government, which has happened because the Republicans and the Democrats have not been able to agree on how to fund the government, and therefore funding has been temporarily put on hold. Many federal employees have been furloughed, although those in essential sectors such as air traffic control and the administration of Medicare payments will have to continue working despite the lack of pay. Those in the Bureau of Labor Statistics will not be working, which means that important economic data will not be published, a key example being the non-farm payroll figures, which were due out today. US government shutdowns are actually not an uncommon occurrence. Here's a list of the ones that have occurred since the 1980s. There was a fairly lengthy shutdown in 2013 that went on for 16 days when Barack Obama was president, and one that lasted 35 days in 2018 during President Trump's last term. Markets have historically not reacted strongly to government shutdowns, and so far this has been the case for the latest one. Here's the S&P 500 over the last year. You can see there has not been a drop in the US equity market this week. We can also look at government bond markets to see how investors are feeling. If investors were worried about the US government, they would likely sell US government bonds, and we would see a rise in bond yields. This chart shows the 10-year US government bond yield and how it has moved over the last year. There has not been a noticeable rise in the last week, suggesting that investors are not currently feeling particularly unsettled by the shutdown. Cybersecurity is also in the news this week after the UK government agreed to guarantee a £1.5 billion loan to Jaguar Land Rover. The company is one of the UK's largest car makers, and it had to halt production a month ago after being hit by a cyber attack. The company employs 34,000 people, and there are another 120,000 people in its supply chain, so the production halt is having a big impact on the UK economy. The loan is intended to help the company get back up and running more quickly. Major cyber attacks have become increasingly common in recent years. Marks & Spencer was hit by a major attack earlier this year, which knocked out its website and caused millions of pounds of lost revenue. Earlier this week, Asahi, Japan's most popular beer maker, was hit by an attack to its orders and delivery system, and the country is currently just days away from running out of its favourite beer. Companies offering cybersecurity solutions have been popular with investors in recent years. Here's the performance of the iSpy Cybersecurity ETF, which tracks listed companies in the cybersecurity sector. Do give us a call if you'd like to hear more about this ETF. Cyber insurance is also a growing area. AJ Gallagher is a major global insurance company, and it has highlighted cyber as one of its fastest growing business units. Not all companies have cyber insurance at the moment. For example, Jaguar Land Rover did not, and also only about 50% of FTSE 100 companies currently have cyber insurance in place. One possible reason is that this is a fairly new area, but another is that some companies question whether these insurance contracts will end up paying out, as many of them have lots of carve-outs. Remember back in COVID when many insurers refused to pay out on business continuity insurance contracts. But either way, cyber insurance is definitely an area getting more attention. And lastly, it was good to see some positive results from Nike this week. This is the world's largest sportswear company, and it has been struggling a bit of late. Here's a chart showing the breakdown of where the company gets its revenue from. Footwear is by far the largest segment at 64% of revenue. In recent years, there has been more competition in footwear from newer brands such as Hoka and On. And additionally, Nike has been impacted by the new tariffs as it makes a lot of products in countries such as Vietnam. Here's the share price over the last 5 years. You can see how much it has struggled. However, the last set of results suggested that the company might be at a turning point. The numbers were ahead of expectations, and the company achieved revenue growth in the all-important US market across footwear, apparel, and equipment. So do give us a call if you'd like to hear more about our thoughts on Nike. And moving on to have a look at next week, it's fairly quiet on the corporate calendar, but we are expecting results out from Shell. That's it from us. Have a great weekend, and we'll see you next Friday.